When I reflect on where I come from, Middle East, a few things that strike me. One is that in the next 10 years, there's going to be something like 60 million young people in the Middle East and North Africa available for employment. That's over 6 million per annum jobs to be created in the region. The expansion in demand for energy in the region is growing between 5 and 7% per annum in most areas, which means that by mid-next decade, they'll have doubled their energy consumption rate, if it's business as usual. More shockingly, if Saudi Arabia, the swing producer of the globe, of the world, continues business as usual, by 2040, they will be a net importer of energy. Things are changing very rapidly in the region. Now, I'm not making forecasts on that last one because I don't believe it will happen. But it will happen if things don't change in the region. And things are changing in the region, and it impacts the globe as well in that process. But let me start 10 years ago when a company, Oman LNG, it was conceived in the 90s. It was at a time when gas was a rather unwelcome waste byproduct of oil production. And the question was what to do. Environmental sensitivity says flaring was not really an option, so try to monetize it. And LNG at that time was reasonably attractive. Mind you, the forecast for oil prices at that time was also around anywhere from end of 90s was $10 again. And then the optimists in the big companies, ExxonMobil, Shell, and BP says, well, maybe 15 to 25, and there's a few really outreachers who said, well, it might even be 35, but we don't use that for planning purposes. And that was the vision up until 2002, 3, maybe even 4, you might remember. And it just shows you how we get it wrong. And I suspect all the forecasts we've been talking about for the next 10, 20 years, we reflect back, those of you who are around to reflect back, of course, will see we've got a lot of them wrong as well. But I think one thing that we probably are not getting wrong, and that is a growth in population in the world, 8 billion now, going up to 9 billion in the next 20 or less than 20 years. We're looking at energy demand of 50% by 2030, give or take, it might be right. But if you think that the growth in wealth and the number of people joining the middle classes in China, India, the demand in the region of the Middle East, then yes, it's probably a reasonable bet that it's going to grow and grow at a significant rate. So where's it all going to come from? Coming back to the story of Oman. Wonderful story. I won't go through all the details, but it was conceived in the early 90s. We had this gas. How about monetizing it? There was somewhere in the mid-90s one gentleman, a Dutch gentleman, who suggested, don't bother building an LNG plant. Let's stick it in a pipeline and send it to India. As an idea, not a bad idea, but geopolitically very challenging. It didn't happen. So Oman LNG was born. And from the first day of operation, it has been a success story. Also, in its structure, it was fairly traditional. It was a combination of government, 51%, and then private shareholders, the other 49%, who provided a lot of the finance, then the technology, and the assurance in terms of process and operations. It's why I'm standing here today. Again, it was a good integrated story of gas supply agreements with the government for the gas to go into the plant, with long-term supply and purchase agreements with reliable, AAA buyers in Korea and Japan. It was so successful, in fact, that even in the early 2000s, 2003, 2004, it was decided to build a third train. It was probably the cheapest train ever built. I mean, see, on the Pacific cost, it was just over $200 per million tons per annum installed, yeah? Today, figures can be as much as 10 times that for the same amount of capacity. In that period, too, we built up a fantastic network of relationships, because not only do we have the long-term buyers in Korea, Japan, and then more recently in Spain, but through diversions, swaps, and the odd spot cargoes coming out of Oman, the relationship was built up to 35, 40 different buyers around the world, which we could call on and say, we may have an opportunity, are you interested? So a tremendous reach, very impressive, a little country at the tip of the Arabian Peninsula, really engaged in the world of LNG. It was a great success story. Where did the gas come from? And then you start wondering about the first issue. Because the supply line was that blue line you see there, which is a dedicated pipeline. It's actually, it's a double line just for security purposes, coming from the middle of Oman to the coast, a place called Sur. And that was the supply line. There are some other gas pipelines in Oman, not many, but feeding Muscat itself, the capital. More recently then into Sohar, which was an industrial expansion zone in the mid-2000s. There was a pipeline going from there into UAE. It actually was built as an export line from Oman to the UAE. But I think it operated like that for a couple of years, and then the flow was reversed. It is now an import line from Qatar to UAE into Oman. And what you're looking at is basically the only international pipeline in the whole region. That is, if you don't count the one built in the late 80s from Iraq into Kuwait, which was never commissioned. Interesting thought, yeah? The investment in gas was also pretty meager, not only in Oman, but in the region. And as a result, in the 2000s, the utilization of gas for domestic power, industrial expansion, it ate into the production capacity. And today, and for the last number of years, that capacity, which has remained static, but industrial expansion has grown, domestic demand has grown, and it is now at a delicate balance. And the challenge for Oman and indeed many of the Middle East countries today is how they're going to meet domestic needs for power, water, desalination predominantly. Secondly, in the production of oil, which still is preferred to gas, because gas sells at a discount, the enhanced oil recovery. Because particularly in a country like Oman, where the oil barrel is getting heavier, and the extraction is moving more and more to secondary and tertiary recovery, these are more energy intensive. And if you have to choose between using gas to produce the oil or putting it in a ship as LNG and selling it, then even at crude parity, the equation is very simple. You produce the oil. And then, of course, there's industrial diversification. And, of course, what's hampering the region is the total lack of regional gas network. And their concerns, of course, is sustaining revenues in a period when domestic demand is increasing and eating it away at potential exports. And today, for example, in the region, you have gas shortages in Kuwait, UAE, Bahrain, balancing in Oman. Yemen, well, Yemen is a difficult story because it is exporting, but if it were ever to get its economy back on track, then it would very quickly join Kuwait and UAE and Bahrain. Saudi Arabia, by strategy, does not export gas. And then you have the long ones, which are Qatar, which is the big brother, and Iran and Iraq. Iran has plenty of gas, but it's geopolitically not possible to export, though they are forecasting for export of LNG next year. And Iraq, great potential in the south, just north of Kuwait, by the way. But again, we have to see what happens there. And the lack of infrastructure is really hurting. And that sounds kind of crazy when you're looking at a region that's sitting on reportedly some 42% of the conventional gas reserves in the globe. And they're talking about, at current rate of production, they could keep going for another 100 plus years. Yeah? And this is even before you start getting into the unconventional gas game, where undoubtedly the region is also quite rich in. And the initial indications are that that is the case. Yeah? So, what's the other problem? Subsidies. On average in the globe, there's something like $500 billion spent on subsidies by governments around the globe every year. About 2/3 of that's in the Middle East. It's huge. And it's reflected by examples here where governments, and sometimes for good reasons because they do it in other parts of the world also, will provide gas at a subsidized rate to encourage diversification and industrial growth. But when you're looking at figures around the $1 per million BTU or $1.50 per BTU, and you're looking to a future which looks at $4 to $5+ per BTU to produce the new gas, then there's a problem. Up top of that, of course, is with highly subsidized, you're sending all the wrong market signals to your consumers. And so the level of wastage is enormous. Take, for example, in Saudi. This summer, they'll be burning close on 750 to 800 million barrels a day of sweet crude to stay cool, to produce the energy to keep the air conditioners going. That is, in hindsight, a dreadful waste of a valuable commodity. The gas is there, but the economics for actually exploring and developing that gas was never apparent until recently. And there's a lot of catch-up, but also there's a lot of opportunity in this. Because the role, as in the past and in the future, for private investors and IOCs as well as NOCs and other players to actually participate in the opportunities that these offer are tremendous. Conventional gas, and I think I won't belabor this point, but the number of what I call mega fields, you can count them in one hand nowadays, yeah? And of course, the big play in the future is going to be into how you actually exploit the smaller conventional fields, whether it is by floating LNG or some other mechanism. But it is a huge challenge. I suppose in some way a lot of the unconventional gas fields could be regarded in some respects as small pockets of conventional gas, but need different techniques to explore them. But what this does indicate, once again, is that the direction of cost is upwards. If you take the global, for example, between conventional and unconventional gas, it has gone from 2007, where the unconventionals were quite small, about 7 or 8%, anticipated by 2030 to be 12 or 13%. An interesting comparison, by the way, is in the US, where unconventionals now are anticipated to, or forecast to be close to 50%, and we're hitting 60% plus into the 2025, 2030 region. So the move, and I think there's enough has been said earlier on today about the switch to unconventionals and how you actually realize those reserves in an economic way as possible. I'm a bit shy about showing this particular view graph, particularly after the presentations this morning, and that is the cost, because these are costs mainly associated with dry gas or shale gas. Yeah? And even though there's a lot of expectation now with the swing of rigs from the dry shale gas to the light tight oil and shale oil, the gas associated with these, with oil and light oil and shale oil, is still a very small percentage of the total gas produced. And so when one worries about the bubble effect, is that a lot of the gas and the dry gas being produced today has been largely due to concessions made. And you know the concession process in the States is usually 3 to 5 years. And if you don't monetize that gas, you lose your concession. So they are commitments that was made when Henry Hub was higher. If Henry Hub stays where it is today, then the pressure on producing the unconventional gases will increase enormously, because the ability to go after the oil and to get sufficient gas, associated gas with those, has yet to be demonstrated. The figures are still too low. Okay, this is a slide everybody knows about. What many people don't say about this slide is that prior to 2005, 2006, Henry Hub was actually remarkably linked to oil. And that disassociation from oil is only a recent phenomenon. And so I'm not saying yes or no, and this is not an argument about whether oil indexation is right or wrong, because I think that's the wrong argument. We will pay as consumers what we pay for gas, yeah, and what will determine that We don't really know. But what is sure is that the price is going up, and there's a need for it to go up, if only to support the need for investment, the R&D that Professor Helms was talking about, to generate alternatives, to identify and exploit alternatives. Some people think that with Henry Hub at 2 or 2.5, it's a threat to the conventional suppliers into Asia-Pacific. Well, it's not as big a threat as some people make it out to be. First of all, Henry Hub is a point in the middle of nowhere. By the time you get to the Gulf, for example, you're already at 3+. If you then add in the capital cost, having to transport your LNG, if it's from the Gulf, down to the Panama Canal, through a Panama Canal that will only be ready to take LNG vessels in 2014, and then a very long haul across the Pacific to the Asia-Pacific markets, you're looking at $12 plus into those markets. Is that a threat to the conventional suppliers? I don't believe so. If you then say, well, I won't go there, we'll take it across the Atlantic, you're still landing it in the Atlantic at 9 to 10. Where's the big advantage? Not much. So if there's a threat, if that's the right word, or a new competitor for the Asia-Pacific markets, it's more likely to be coming from Canada, who have probably had to back out more gas from the US market because of shale gas and need a new home for it. And so, but those developments are going to be in the late part of this decade into the early part of the next decade. So where's the long term and where's the Middle East sitting in all of this? Yeah. Well, I suppose the Middle East, the main producer is Qatar. Its capacity of 77, the commitment, or at least the policy or strategy of the Qatari government is not to exceed that, to put a moratorium on further development of LNG. And there's no reason to believe that they will relinquish on that anytime soon. The rest of the region needs more gas, and its capacity under existing circumstances to produce more for the world is very limited. There are some opportunities for unconventional gas, but that's looking at the end of this decade into the early part of next decade. And in the meantime, the main players for additional gas are coming from Australia, though it is doubtful that they will meet their target of over 80 million tonnes per annum by the end of this decade. In the longer term, and I'm looking at towards 2030, I just speculate a little bit. There's a lot of talk about the gas around the Caspian going east or west. Well, whatever about going west to a market that's already well supplied and reasonably saturated, though obviously the European Union would like to have strategic alternatives. If you're looking for the right markets where the real growth is taking place, that gas should actually come south and out through the, not through the Gulf, but possibly through the Arabian Peninsula to the markets that are really paying the top price and will continue to do so. The alternative is pipeline across Russia, China, and down into those markets. But that's a long way and politically difficult. The issues that may come in the next 15 years will be China is potentially sitting on an awful lot of unconventional gas, shale as well as coal bed methane. And the question, will that ever back out its LNG? I don't think in the long term as well as in the short term, because if you look at the energy portfolio of China today, it is over 70% coal-based. It is clearly committed to moving that percentage dependency to a much lower figure. Not clear how much, but clearly they want to move it much lower. So the appetite for gas in China will remain strong, in my view. So just to summarize where I think the Middle East is and where it is in the world today, yeah, the forecast of a 50% increase by 2030 is probably reasonable, but it will be predominantly in non-OECD countries. In OECD countries, if anything, you're seeing a decline. Fossil fuels will account for about 77% of that. There is today no alternative technologies that are even off the starting blocks. Renewables today account for less than 1.5% of total primary energy consumption in the world. To even quadruple that inside 10 to 15 years would be remarkable, looking at how technologies developed in the last century. Mention has been made about greenhouse gases. There's very few people who don't take that seriously today. And it does, even if it's a wrong bet, it's the safer bet. Put it the other way around, who wants to risk climate changes as a result of increased carbon dioxide and equivalent gases in the atmosphere, leading to significant increases in temperature. And the other interesting fact is that of that 60% of the gas demand in 2030 forecasted is still to be identified and brought into production. So in conclusion, and this applies for the Middle East as well, the unconventional gas does offer huge opportunities. It has offered the globe a sense of security around gas, which I think has been tremendously important and is the game changer. It is providing an alternative which the world can rely upon. It is security to buyers as well as sellers, by the way. There will be game changers in technology innovations, energy mixing, also supply diversification through the whole unconventional gas chain, as well as small conventionals. And there is a huge opportunity for a significant and strategically important interconnected Middle East, which is totally lacking today. And I believe the challenge for the Middle East is how it wants to manage its own exploding consumption growth and how it's going to maintain its geopolitical stability. Thank you very much.